Few days ago we saw Bitcoin price increasing around 3% and then a sharp pullback of around 5.5%. All of that happened within less than 4 hours, and that caused around 300 million of liquidated shorts and 200 million of liquidated longs just on BTC pairs. What can you do so you avoid being liquidated, and what are the things you should be careful at if you're doing leverage trading? Stay tuned and I will deep dive into it in this video. Hello everyone, welcome back to Crypto Grid channel. My name is Željko and I got a few questions on Telegram group regarding the large Wicks that are happening in the markets and that happened recently, why they're happening and what you can do so you stop losing money in crypto markets. But firstly, I would like to thank you for supporting me and a lot of you who subscribed to my channel recently, so thank you. So if we take a look into the chart, we can see that we have first resistance at 28.5k, and this is usually when these things actually happen. So we have a breakout to the area of around 35k, and often market makers want retail investors to think that the trend is exhausted and that we're gonna lose momentum and pretty much reverse in price. So during this whole consolidation phase, many people think that we're actually gonna reverse. So during the whole this time, short positions are building because people think that we don't have enough strength to break through this range. And often, actually the opposite happens. We break out through that range, and as soon as people start longing the breakout and thinking that we're gonna go much further up, we actually reverse. So they're pretty much losing in both of these scenarios. And if you look into this area, this pretty much happened a similar thing. As soon as we break out and as soon as people expected that we're gonna go to 40k or even higher, we actually reversed. And if you look into the lower time frame, this reversal was like 5.5%. So everyone that used, for example, 25x leverage or higher, they got immediately liquidated. And these things are happening actually pretty often. Even besides this situation, this is maybe the most common one, especially as bull market is starting. For example, you can see that at one moment in like June 2023, we had a week for Bitcoin on Binance US that pretty much reached 130 something K, which is pretty much insane week, and this pretty much eliminated all the shorts actually at that moment. Another thing that I wanted to show you is, for example, if you remember during the previous bull run, if you look into BTC USD pair, again on Binance US, we had one moment when the price dropped to like 4 or 5k or something in that area, which pretty much eliminated all the longs during that time. So one obvious point from this is that you should never keep your leverage position open for a longer period of time, because you have much higher odds that something like this might happen, especially in a highly trending markets, whether it's up, further downward trend. Another thing that is important, and that's why I suggest people to not use cross leverage, is because even if you're at like 1.5 to x leverage or some low leverage, if you don't have a lot of assets deposited on your futures account, or if your position is not significantly lower in comparison to your assets on futures, all your futures accounts will be liquidated, and this is the reason why you want to avoid cross leverage. Another thing to have in mind is if you're trading lower liquidity assets. For example, if you look at the moment when Bitcoin price pulled for 5.5%, if you look into it, it pulled for around 25%, which is 5 times more. So everyone that used 5x leverage got liquidated here. Similar thing happened with Render, which pulled for around 22%. So if somebody used 5x leverage and he entered the long somewhere in this area, pretty much his position was liquidated. So whenever you're trading lower liquidity assets, you need to use lower leverage and you need to be even more careful. Same applies when you're using lower liquidity exchanges. For example, if you were shorting Render on Poloniex, for example, this was in May 2023, price of Render went to like $42, which is like 15x during that time. So whichever leverage you use at that moment, you would be liquidated. And even if you use cross margin, if you were shorting, that would be really bad for you because you would blow up your whole account. So obviously one point to pull out from here, like it's better to use lower leverage, and whichever leverage that you're using, I suggest you to use isolated margin and to always use stop losses as well. And stop losses shouldn't be super close to the liquidation level, because if you get larger wick and you don't have anyone that is on the opposite side and you have larger spread, that means that your position would be liquidated anyway. So you need to be careful of that as well. Also, you can easily count liquidation levels just by dividing 100 by the amount of leverage that you're using. So if you're using 10x leverage, that usually means that if the price decreases or increases 10% opposite of your direction, you would pretty much get liquidated. If you're using 5x leverage, you would need to have 20% movement in price. If you're using 25x leverage, that means that you would need to have 4% moving in price. At 50x leverage, it's like 2%. So if you're using anything above 10x, it will happen so often that the price movement is so fast that you're not even able to react. So I hope that after this video you will be even more careful when it comes to leverage trading, and that you're gonna take these things into consideration that you saw in the video. If you like the video, please consider subscribing. You can also write any questions or anything in the comments below. I reply to all of it. So thank you for watching and have a wonderful day. Stay strong and healthy. Bye.